A lot of people have seemingly been concerned about the recent market activity and market dynamics of the past couple days. Not surprisingly, the market has had a face ripper rally to very high levels and the highest trajectory we've seen since the recovery off the bottom. Could it be that we saw some sort of rally then and we're seeing some sort of bubble bursting rally now? Well, one could point to the rising VIX, the sharp VIX, as an indicator that that may happen. But I challenge that assumption of the world's largest and most successful economy, still largest, and the one that seems to be the strongest. Not too long ago, that was China. But now, the United States has seemingly reclaimed that title because vaccines have been distributed and the US is in a very strong position relative to the rest of the world. Not saying anything bad about China with that, not trying to say anything bad about anybody else. But we have the vaccines, we have lots of people getting the vaccines, and now everyone can get the vaccine. So there are fundamental reasons to believe that the economy has recovered well to this point and will continue to recover well to this point. Things like savings rates still remaining high, etc., etc., etc. To me, this eliminates some sort of bubble bursting possibility from occurring. In order to see something like that, we need to see some 30% drawdown, some big time drawdown from the top, and that is typically catalyzed by some event. In the past, it was the coronavirus downturn. It was debt crises. Neither of those are on the table. We have a Federal Reserve that is buying all debt, eliminating that possibility entirely. And we've recovered very well from the coronavirus and injected inflation and stimulus and liquidity into the economy that is propping up the market. So I think any sort of drawdown, significant drawdown, is very, very unlikely. But that doesn't go to say that this pullback is shocking me at all. It's not. Any sort of pullback is not going to shock me either. After a run, the market kind of cools off a little bit. That's the way things happen. But what I'm seeing today is a lot of stocks that are cooling off shouldn't cool off, particularly energy stocks. Energy has continued to perform very well and is inflation oriented and is at a very high price relative to where it was just a few months ago. Yet the economy is not in full force yet, especially in the rest of the globe outside the United States. So as the rest of the world comes up to the current position the United States in, that should pick up energy demand. That will increase those stock prices, increase the price of oil, etc. And I expect the United States economy to continue lifting from where it is at this point, increasing energy demand more. So there's a whole lot of energy demand to come, and that is here right now, even. Shockingly, there is. So with that in mind, on a day like today, when energy stocks are down pretty significantly and people are kind of just panic selling everything, I would use this opportunity to add to your positions. Energy stocks are some of the best out there in the market. Given the price, they are hated on. I don't really see a case for them to continue going lower, especially something like Exxon, which is foolproof for the long term, investing in carbon neutral energy so we can maintain, for the most part, our current infrastructure without having to rebuild everything. That's quite important. In addition, carbon capture technology so we can reverse any damage that has been done, and there has been damage. The climate has been altered. Now we can have climate control. That is a very important thing to have, and we'll make sure that this, melting of the planet doesn't actually happen. So we'll see what happens with that. But I remain bullish on energy, and days when that kind of stuff is down big, I would add to that. Now, the real question I have, and other people seem to have as well, is what is happening with tech stocks? We like these stocks. What do we do about them? They're our favorite stocks to think about, talk about, etc. Well, don't know how they're going to do in the next week, 2 weeks, 3 weeks, 4 weeks, month, or 2 months. But as I have said, if you have a long-term view, long-term time horizon, and long-term definite vision for what some stock should do, or some company or some product should do, you should hold that stock through the ups and the downs. This is how technology investing works. Go big or go home. You're going to get hit. It's just part of the process. They are risky stocks. That's what they are. If you look at something like ARK is a phenomenally well-performing fund over a 5-year period. But if you look at them over 5 years, for 4 of those 5 years, they weren't doing so well. And then all of a sudden, they start doing very well, and that accommodates for all of their years previous, making them better performing than most other funds. So you have to take this notion and apply it to your technology investing. You can't expect a technology stock to perform like an energy stock. It's just not how it is. It's not going to be a consistent grower. It will be all over the place. I've highlighted my investment in CRISPR since 2017 as an example of this. That is a 4-year investment. If you talk to any venture capitalist, which is very similar to growth technology investing, they will tell you that things kind of grow in an exponential fashion. They don't just go in a linear straight line where you can consistently expect a return. So you have to take that notion and apply it to your growth and tech investing. And it does look like a lot of these stocks are well off the highs. Now, I'm not saying buy an ETF or buy all these SPACs. What I'm saying is, if you have a vision, a product, a company that you like, it is likely sold off significantly. If you are willing to hold it, regardless of the price movements, because you believe in the long-term future and you want to be like ARK Invest, go ahead and buy it and hold it and don't frickin' sell it until it gets to a very high price. The stuff selling off today, mostly okay. Energy probably shouldn't be off there, but a lot of tech stuff's coming down. No big deal. Heard a statistic today, IPO's down big. That's fine. I don't like Coinbase. It's very expensive. Lots of other stocks are very expensive. So that technology, broader area of the market coming down is very natural. Energy coming down, that's an opportunity. Distinguish between the two. Energy won't stay here for very long. It won't. Technology, it might. Good technology, probably won't. You get what I'm saying? Buy good stocks, stay away from the crap tech, buy the good tech, definitely buy the energy, buy the fundamental stories of reopening. That's what's going on. That's what's been losing in 2020. Hasn't been doing as well as you would expect in 2021, but should do very well in the second half of the year. So until next time, peace out.